Hello there. We are back with yet another discussion of Singapore tax, something that you will not find a lot of videos on. But I'm confident that with these videos and the notes that I'm going to provide you along with this, a lot of discussions will become easier for you and you will be able to understand Singapore tax in all its entirety. So follow along with me for the text part first, and then, of course, I will be sharing the notes with you. In our discussion yesterday, I think we were talking about what is income and what is a capital receipt and what is a regular receipt, a revenue receipt. Today we'll spend time on understanding the different sources of income. Now, if you observe, there are quite a few chapters, but right now we are discussing the concept of income, and that's going to be a longish discussion. Based on Singapore's modified territorial basis of taxation, it is important to establish the source of income primarily because any income found in Singapore is immediately brought to tax, whereas foreign sourced income is taxed only when it is remitted to Singapore. It's critical for you to understand something that in other geographies might even be called as the remittance basis. Now, the challenge is, how does the Singapore government know what exactly is supposed to be taxed and what items should be excluded from tax? Okay, now when I'm saying certain items are within the scope of tax, it's necessary to have a list. And when you want to have that list, it's critical to understand that when you are a resident of Singapore, we understand what residential status means separately. But when you are a resident of Singapore, which incomes will be taxed in Singapore and which will not? And assume if you are not resident in Singapore, but you have earned some income there, how is that part going to be taxed? Let's try to understand, how does the Singapore tax authority, how do they define the different sources of income? Based on Singapore's modified territorial basis of taxation, it is important to establish the source of income, as in where exactly is the income derived from, primarily because any income sourced in Singapore is immediately brought to tax. Income earned in Singapore, which is brought to Singapore. Whereas foreign sourced income is taxed only when it is remitted to Singapore. So I could have a situation where uh, I'm a person in Singapore, I'm a resident there, but I earn some income, say maybe in Australia. Now, the income that is earned in Australia cannot be taxed on accrual basis. It will be taxed only when it is remitted to Singapore. What do you mean by remitted? The amount is transferred, amount is brought to Singapore. Remitted means amount is brought to Singapore from the other country. The remittance basis charge is applied by many countries across the world when it comes to taxation of foreign income. Unfortunately, there is no definition or guidance laid down by Singapore Tax Act on what constitutes Singapore sourced income. Recourse must therefore be made to judicial precedents, and the courts have over the years come up with various tests to determine the source of income. Now, this is a common practice in laws across the world. Suppose, there's a particular case that has been that I have filed against a counterparty. Say, for example, someone came and slapped me out of nowhere. I was teaching in a class. This person came and a student slapped me and he left the room. Now, I want to press charges against the student. Let's assume that. Now, there is no law in India which specifically has a guideline, for example, on what are the penal consequences, what are the criminal consequences or civil consequences when a student hits a faculty. There are no laws specifically around it, but there must have been incidents in the past where a student has slapped a faculty. And then what you will have to do is you will have to go back to any judgments made in the High Court, made in the Supreme Court, made in the District Court, and you will have to compare the facts of your case with the facts of, the already decided case. And then you will have to see whether the facts of your case are similar to those. If that is the case, then you can cite that particular situation, cite that particular case law, and you can say that because in that situation, when a student hit a teacher, you levied a penalty of 15,000. In this case, also, the student has hit a teacher, so you should levy a similar penalty. Why? Because facts are the same. That is known as a judicial precedent. In the landmark case of CIR versus Lever Bros and Unilever, source was defined to mean the originating cause. One needs to examine the underlying activities undertaken by the taxpayer in producing the income in order to establish the originating cause of the income, or the dominant originating cause in the event that the income is attributable to a number of originating causes. The location of the original cause or the dominant originating cause would in turn determine the source of income. Let's break it down. When they say originating cause, okay, if I have a property in Singapore and I have given that property on rent to someone and I'm earning income, rental income on that particular property, the income is getting sourced from a property in Singapore. It has originated in Singapore. That is the originating cause, and that would be therefore considered as income originating in Singapore. Now, it might happen in some cases where I have developed a technology in Singapore and I'm selling that AI tool, for example, to different recipients in Singapore, different users in Singapore. But I'm also selling it to people outside the country. Now, the question is, out of the 100 rupees I earn, 60 rupees is earned within Singapore and 40 rupees is earned on account of export sales. Now, the question is, the customer is sitting in another country, but I am sitting in Singapore. Point one. Point two, you also have to understand that the technology was made in this country. It was specifically created in Singapore with people in the geographical borders of this country. And now this technology is being exported, or this technology is being sold to people outside the country. There are two parts that you have to keep in mind. One, the income is being given to you by a person not in the country, but the source of generating that income was created in this country and it is being sold by your office located within the geographical borders of this country. In that situation, again, the dominant originating cause lies in Singapore, and hence you could say you could say that the income has originated in Singapore and would be taxed immediately in the country. The location of the original cause or dominant cause would in turn determine the source of income. Applying this test would, barring special circumstances, give rise to the following consequences. Trading income would be sourced in the location where the trade is carried on or exercised, and the trading profits are derived from that location. I have an office in Singapore City, and my head office is there. From that particular location, I'm trading with people within the country, outside the country. The income would be deemed to be derived from that location. Employment income would be sourced in the place where employment is exercised. So if I'm a Singapore national working within the country, the income is sourced in that region. But if I'm a Singapore national who is working, say, for example, in Malaysia, which is like another country, separate geographical country, then employment income would be sourced in the place where employment is exercised. Now, because I am operating out of Malaysia from that location, the employment income would be sourced there. So, what do you have to keep in mind? Employment income, place where employment is exercised. Directors' fees would be sourced in the place where board meetings are normally held. Now, see, the word again normally is critical. In certain, some of the CA firms that I have worked with in the beginning, they would have their regular meetings in their office, but for their annual meeting, where, they would discuss the strategy for the next year and all of that, they would book some resort where, they won't necessarily be disturbed. And in that resort, they would discuss the plan for the next year. So it could happen that in case of a country, the board meetings are usually held in Singapore, but one-off meeting could be held, elsewhere, like an offsite, for example. So don't consider that meeting. Check where are the meetings normally usually held. That would become the source, that would become the place where the income is sourced. Dividend income would be sourced in the location where the paying company is resident. Singapore company resident in Singapore paying you dividend, income originates in Singapore. If it is, say, for example, a company in New Zealand that is paying you income, the income originates in New Zealand, not in Singapore. Interest income would be sourced in the location where bank deposits are placed. Say you have a lot of money and you have deposited that money with whom? With the Swiss bank, and the Swiss bank is paying you interest. Then the interest income is sourced in the location where the deposits were made, and the rental income from the letting of properties would be sourced in the place where the property is located. Rental income sourced in the place where property is located. So the location of property again would play the role here. So what you need to remember here is, if you're talking of employment income, it is sourced from the place where employment is exercised. If you're talking about director fees, they are sourced in the place where the board meeting is held. So this table or this part of the study text is what you need to remember. Now, once you know where the income is sourced, then income sourced in Singapore is subjected to tax immediately, whereas foreign sourced income is taxed only when it is remitted to Singapore. So income sourced from a foreign location will be taxed in the country of Singapore only when it is brought to Singapore. To remit means the amount has to be physically transferred to your account in Singapore for that particular amount to get taxed.